Good afternoon, everyone. Welcome to this market update this afternoon here on the 19th of March 2020. And wow, what interesting times we're currently experiencing, eh? So, haven't been on here for a little while actually, but a few days longer than I would have liked to. Had the dreaded lurgy, and I've used of for you that don't know what that means, I haven't been well, and no, I don't have the coronavirus. All good. A lot better here. Just a day of rest, lots of vitamins and rest and fluids, and just smashed it. So all good. So anyway, I just want to start here with oil. And wow, has she not dropped? She has dropped huge. So if we go here to the oil chart, you can see that we have this breakdown here, pull back to the daily 50, and this massive wave 3, which, as you can see, is very much overextended as it's gone quite past this 1.618 Fibonacci extension. You can also see here on a monthly time frame that it broke this previous support, and with 12 days left, let's see if it rejects this area or comes up, fails, and just continues further to the downside. I'm expecting a pullback, and if we go back here to the inverse ETF, I didn't trade this as in my Forex broker, which I can do, but I took this as an inverse ETF, and as you can see, I took it here, bought it at $17.57 unit price on the 25th. This break and retest of the daily 50 and 0.382 fib region, and I bought it here as it popped to the upside, and then just closed it earlier this morning because it's hit around where I was looking to target, and I'm expecting a pullback, so that also lines up with this being a pullback, and you can see this daily's closed out with this quite aggressive high test. So I think it was a good sell, 203% movement on that. So it's not margin, it's just I basically buy a certain amount of units and the difference there. So if it's 5 grand, you've just doubled it to 10 grand. So not bad for a couple of weeks here. So I was really pleased with that, how that trade went. And funnily enough, as I'm looking here for a pullback on oil, this is oil long chart. And you can see here that it was holding this sort of range. See here on a weekly. And it just, with this oil drop, it's just massively dropped down here to around 26 cents currently, and as low as 19 cents. So I would expect if oil pulls back, well, this will pull back also. And also, being an ETF, this is a longer term hold. So, let's see. I don't need any margin to service it. It's just spot. If it drops lower, then the value goes down. If the unit price goes up, the value goes up. So I bought a bit of that. Another couple of ETFs here, except this Gush has oil and gas, and I just wanted to stick to oil. And using ETFDB.com, this UWT actually had more volume, and I like to look for the ETFs with higher volume, basically because the higher the volume, the more the buyers and sellers in it, right? It's more liquid. So being more liquid gives you a higher probability that when you want to sell your position, there's someone on the other side to buy it, compared to a lower volume fund with less buyers and sellers. So it may be where it may be a bit more difficult to sell when you want to. Another position I bought into was NUGT ETF, which is a Direxion Gold Miners Index Bull, and it's ×3, so it's magnified 300%. So that's upside and downside. But look at this for a buy, $5.20, literally at the extreme low. If we go here to the intradays, you can see that $5.20, it literally is exactly where it opened. And that's where I put my order. I put a buy at market, and it moved up nicely, and now we're having this pullback. So if we go here to the gold against the US dollar, you can see that it's had this movement down the 4-hour chart. It's finding a bit of support now with 1, 2, 3 bottoms potentially. A little bit of bullish divergence. You can see it better here on a Howard chart. However, this bottom and this bottom here are a little bit higher than this bottom, but potentially higher low double bottoms. So bullish divergence. Smaller candlesticks, meaning the price is slowing down, it's decelerating. So I expect this to pull back and to potentially pull back to this 4-hour 50 short term, and potentially if it breaks that, then continue to the bullish side as or potentially, because if you look back in 2008 to 9, if we are in a recession, and I'm not sure if it's been called, if any of you know Jim Rickards, he had an interview recently on YouTube. Go check it out. It's quite good. He's got some really good books too. Highly recommend them. And it looks like things are playing out exactly how he spoke about. So if you look here in gold, basically what's happened, if you look here in 08 to 09, we did have this drop for pretty much all of 2008, right? However, at the end of 2008, if we measure here from the very low of the wick to the high, we had 172% gain. So basically, as most people are saying, currently we've had a sell-off of gold because people are selling their gold to pay for their margin calls to serve it, that were servicing their equity positions. And if they're long equities, then they've had large losses, and to pay the losses for their margin calls, they've had to sell some of their gold holdings to pay for that. So if we have this drop now, a pullback, a continuation of the downside, hold some support here, and look, we can see here it pulled back to the 50 EMA region. So I'd expect that, because last month we had this high test. We zoom in. This month we've had this rather, bearish engulfing currently. So I'd expect this to pull down to potentially the daily monthly 50. And if it does the same as what it did back in 08, and it's because back then it was the same thing, people selling their gold to pay for their equity long margin calls. So come down here, stall around this monthly 50, and then continue. And if we take that same gain back in 08, 09, say around here, 172%, to zoom out a bit more. We're looking at around 3,600. However, if you do the Fibonacci extensions, if it was in this sort of range, finish this wave, Elliott wave 5 pattern. If this is a potential wave 1 breakout A, B, C, wave 2 pullback around here, wave 3 extension 1.1618 is 1.618 rather, sorry, 2,200. So let's see what happens. That's long term. That's just something interesting to look at. But yeah, I'd expect a pullback and continue bearish down to this 50, hold that, and then look to potentially add more, more long positions, because it's a really good upside. And this is leverage times 3, so magnified 300%. Now, I bought some up here, as you can see. However, not a huge amount. So at this buy here, I pretty much bought 3 times the amount of buys here, pretty much to average down my buys. Because I see gold as a long-term hedge currently, in this current climate. Yes, this is an ETF. And if you look at physical gold and silver, well, because it's, I guess, not as traded as much, there's a lot of buyers and it's more long-term holdings for value. The value hasn't fallen like this has. However, when we look back, remember when we look back in 07 to 09, gold had a nice rally after around 8 months of the initial equities drop. So that's what I'm currently looking at. That's equities. Quick look here at the stock market. You can see wave 1, wave 2, pullback, wave 3. This is an extended wave now. You can see if we measure from the extreme low back in the 09 March when this rally started, I have a rough target here. I expect this to drop further to complete this 5-wave Elliott pattern on a monthly time frame. Which you'll see better on a weekly and daily, obviously, but a pullback down as low as here, and that's my target, previous highs, decent retracement, and that would also line up similar to that drop we had there and that drop we had there relative to this. So that's my long-term target, but for now, because wave 3 is overextended, I'd expect a pullback here for wave 4 and then a wave 5 to continuation. So indices now, same all across the world. Dow Jones Industrial Average had a significant drop. Currently, almost 33% drop. Nice retracement. I'd expect a pullback here and a continuation. Let's see where it goes. Potentially back around 16,000, maybe as low as 14, 13. But they're all doing the same. All world markets, all indices are doing the same. This is the Nikkei 225. Same thing, you see double tops, break down. This movement here from the highs to here, same thing, 31%. China 50, and see similar thing. UK 100 index, same thing. Measure the high back at the beginning of the year to here, around 34%. FTSE Euro top, this is at a very large drop, but same similar, 34%. German DAX drop as well, sorry about that. S&P ASX 200, and the Aussie has taken a battering. It's one of the worst performing actually across the world, but you can see same thing, so maybe it isn't. Aussie dollar's absolutely taken a smashing. However, if you live in Aussie, earn Aussie and spend in Australian, it's okay. It's just when you're exchanging with the rest of the world. Most of my money is not in Australian dollars though, it's mostly in US ETFs, equities, gold, silver, cryptocurrency. So I got a little bit of Australian dollars, but I expected this, so I pretty much was not holding much. And like, yeah, this last month, ever since February 24th, there's been a lot of losses, but I've been ready for this, and I've done rather quite well. So you know, I'm very quiet, and I won't say much more because look, a lot of people are losing a lot right now. Their jobs, maybe they don't have much savings, they live week to week, and I feel for them. But you know, I guess that's the world we live in. You know, everyone does it their way, and you just have to take responsibility for your actions at the end of the day. You know, if you're going through tough times, I encourage you, there's light at the end of the tunnel. You know, don't give up. Anyway, guys, should we look at anything else? Yeah, maybe a bit of crypto. Crypto had a rather large drop the other day, and Bitcoin's the leader, dropped around 40-50% in a single day. You can see the rest of the market did the same thing. XRP, we had this drop here, February 14th, that had a high of 33.5, and now we're down below 15 cents. So, good time to spot buy, add to your overall holdings. I don't trade it, but all of these are a good value to buy. And crypto for me, this is the future, guys. This is how money will be. Yes, there'll still be fiat, but digital versions. This will all be integrated. The internet of value, as they call it, the internet connecting money, money being able to move at the same speed as information. So great upside and long term. Like if you invest in this 5-10 years at least, same as internet back in the 90s. And you can see they're all similar. They're all down at extreme lows, a lot of them. Great buying zones. Great buying zones. IOTA, that's looking nice. 12 cents, wow. So you buy here and hold back to the highs, you've made 2,770%, right? That's good returns. Now you look here, July 17, and this about 5 months we had a high. Who knows? Doesn't matter even if it doesn't happen in that time. Just like guys, you got to think bonds right now are offering quite low returns because they're government bonds. They're low risk asset class, so you'd expect that. However, they're very good for people that have high amounts of money, liquidity, because you think if you got 50 mil, 100 mil in bonds and you're worth $300 million, you want to protect yourself. You don't want to have, too much in risky asset classes. So 100 mil paying a small percentage even is more like great return, very low risk. So crypto appeals to those, of course, with lower net worths. Warren Buffett isn't interested in it because the guy's worth 70 billion. Like he doesn't need to worry about this. He's done his thing and he's been very, very good at it. So I understand him. Plus, look at the guy's age. He's got a company to run. Go watch his shareholder meeting videos. He's got to protect his clients. and you don't buy into the crypto usually, maybe unless you're buying it for yourself. Like, as soon as you're buying it with other people's money, then there's a whole other range of issues. So yeah, crypto is a great value to buy. Let's look at the total market cap here. You can see here we've had this retracement to the 50, monthly 50, and potentially now looking to reject that. But let's wait and see. Similar here on the market cap, excluding Bitcoin. So quick look at Forex now. I know I'm in one position here. I'm euro dollar short. Now, this trade, yes, I needed a fair bit of discretion. However, for me, we came up here, we're rejecting this monthly 50, which hasn't been broken for a long time. And fundamentally, the dollar right now is in demand as it's the world reserve. People are selling out their equity positions, and what are they selling to? Fiat currency, US dollars. So there's demand for it now. Yes, it's being inflated by money printing and QE, but relative to other currencies, especially the euro, Aussie, Kiwi, Canadian, it's strong compared to the Swiss and yen. Not so, but I really like this. We had this potential fake out here, fooling a lot of people, that it was going to continue to the long side. But if you look here on a monthly time frame, unless it broke that 50 for me, I'm not long at all. I'm not bullish because, well, it just doesn't make sense to me. Just doesn't make sense, I guess. Yes, technically, we had this break and retest, but you can see last week, this candle did not close at all bullish. Yes, it's made a higher high, but that candle looked bullish to you? Definitely not to me. So I looked to get an entry around here, and I entered here on initially Friday, but it came back here to retest. And because of this price action, I did bulletproof. Because, look, if it did continue bullish, I would prefer to cut my losses and look for a re-entry if my bias did turn out to be correct, and I'd wait for another entry, which is what I did. So I entered here on Monday, 16th. Now, discretionary I say because with what I learned, you should technically for this, I should have had my stop a little bit higher. However, this is the reason why. I'm already at 90 pips, right? To come down here, depending where you draw this fib region from, I was just above 0.618, which for a CBO, which is a break and retest of the 4-hour 50, also the 1-hour 50, like, I thought that was enough. 90 pips is a big stop loss, and yes, 27%, because this is a long-term move. Yes, I'm playing it day by day, week by week. Going to wait to see how it plays out, but this is a overall long-term fundamental trade due to the fact that, well, the current market conditions, potential recession, depression, we'll see. But if we look back here in 08, where are we? 08 to 09, we did have this significant drop. So right now I'm looking first level around these monthly lows at 1.05 region. We'll wait and I'll see how price reacts there. If it holds support, turns bullish, I'll shut it down. But fundamentally, the demand for dollars continues, and the times that we're in are like nothing really. Like, who would have ever thought a year ago that a virus was the catalyst to cause this 30% drop, literally since February 24th, 3 and a bit weeks. So if you see this here, this is an aggressive high test right now in the monthly. And if it closes like this here with 12 days left, if it closes with the body down here, well, yep, that's my first level. but I'm looking potentially long-term hold, whether it be a year or so. Like you see here, it took July 08 to October 08. That was pretty quick, right? But you measure the percentage drop, about 22.74, 22.74, right? Around there. Funnily enough, I didn't measure that, but it's very similar. Yeah, potentially the end of the year, but look, 27% position. I'm happy to hold that for a long time because, well, that's the way I like to trade. These positions don't happen often. Everything's lining up in my eyes, technically, fundamentally, just all makes sense. So, you know, I'll keep you updated as that trade continues. Currently bulletproofed because my entry, as you can see, is above the 4-hour 50. So I'm going to manage it probably at least for the short term off the 4-hour. Once we get to around the 10% region, might be a bit more aggressive. We'll wait and see. So anyway, guys, that's probably it from me for now. There's nothing really else on Forex. I'll tell you what though, Aussie and Kiwi, I wish I was in some shorts on those. Massive movements lately. But a lot of the setups I trade just didn't have entries, and that's okay. That's why I've been looking at the ETFs and applying similar strategies, but on a higher time frames to that, as we saw here with oil inverse. Is break and retest of the daily 50. Sorry guys, machine's a bit slow. May have too many things open. So yeah, this break, retest, waited for a bit of a pop, bought it here, market order, because this time zone is 1:30 a.m. for me and I still currently work. But beautiful 200% trade, not trade, position. Lovely. So yeah, anyway guys, that's it from me. Stay well, stay safe, stay out of trouble, and take care. Until next time, that's all from me. See you guys. Over and out.